Hello everybody, we at LM are here to highlight the contents of the interim budget which we call as the statement of good intent. I think the finance minister has done an excellent job as far as the continuation of the momentum with respect to economic growth, with respect to infrastructure development, which has been a pet theme of the government. And I think to start off with, the markets wanted to look at certain important figures which were very critical. One is the capex spend, and if one were to look at the last 4 years, the government has infused around 26 trillion rupees into the capex spending to boost infrastructure spending within the economy. If one were to look at it in a year-wise fashion, it has been around 3.5 trillion, followed by 5 trillion, followed by 7.5 trillion, followed by 10 trillion last year. This has been increased by 11.1% to 11.11 trillion, which is targeted for the next year. Now, this figure on a high base effect is looking quite good and quite impressive, and overall it will be a very big positive as far as infrastructure players, EPC players, capital goods players in the economy are concerned. So this is one positive. The second important factor is the fiscal deficit. The government has not strayed on the path of fiscal consolidation. It has continued its unwavering focus on fiscal consolidation by targeting a fiscal deficit of 5.1% for the next year and 4.5% for the year after that. So I think this is a very positive development as far as the economic rationale is concerned. The third important factor is the overall spending in the economy, the overall focus on the different sectors of the economy, the social welfare schemes, etc. As far as this is concerned, there has been a lot of thrust on rural housing, and thrust on rural housing definitely means that it's going to augur very well in terms of multiplier effect on the economy. It will augur extremely well for areas like cement, steel, etc. One area of concern which we would like to highlight is that there has been a delay in rabi sowing in the economy, and poor reservoir levels have been observed in certain regions of the country. So I think there was an expectation that Manrega outlay etc. is likely to get increased. However, this has not been increased. Overall, to sum up, I think this budget signals the good intent, it signals the good work which has been done by the government during the last 4 years. The tax base has been widened. We have a very strong tax base at this point in time. I think overall this augurs well for the economy. As we talk, a lot of stocks, a lot of sectors have given up their gains. Markets has kind of come into the consolidation mode after it's taking a breather after a long run, and we expect markets to consolidate at the current levels before moving on to higher levels in anticipation of strong development going forward.